Good morning, everyone. We're just admitting everybody in from the lobby, so we're going to give just 1 more minute and then we will get going with this webinar. So currently the numbers are increasing, which is great to see. Give another 30 seconds. And that's 10:02. So welcome, everybody. By the number of people that have joined this webinar has proved to us as a business that this is a very important subject for us to be discussing with you today. We're going to be recording the session. There will be a link sent out with you, and also we have prepared through our research department a briefing document that will support as well. You have a Q&A function, so we will have a Q&A at the end of the presentation so that we can ask some questions to our panel. And thank you for the people that have submitted some questions in advance. My name is Neil Cunningham. I'm the Commercial Director here at Rettie & Co. I am your host, your chair, to make sure that we move through smoothly with the different presentations that we have, and I'll chair the Q&A at the end of the presentation. So the agenda for you today over the 45 minutes is that you'll hear from Andrew Meehan, who is our Associate Director, who's going to give us a little bit of an update to the market, a bit of a history lesson to what is happening within, and in particular, the rental space as well. Our Lettings Director, Karen Turner, will take you through the headlines, where it's come from the announcement of the current rent freeze that is in place. We then need to touch upon additional changes when it comes to short let, and then we'll go back to a bit of a sofa conversation with Rory Cowan, who has joined us, who was our legal representative that works with us closely from Bannatyne, Kirkwood, France and Co. And then Karen and Andrew will join Rory to the question. I do apologise that you'll see Rory as Samuel. Unfortunately, his son overtook his profile while he was working schoolwork through lockdown. So do apologise if I keep referring to Rory as Samuel. You do know that it is actually Rory rather than Samuel. So without further ado, let's get moving, and I'd like to hand over to Andrew, who's going to give you an update with regards to the market. So Andrew.
Thanks, Neil. In light of recent events, and before Karen takes us through the detail of recent legislative changes, I thought it would be useful to start with some context, both on the sales and rental markets. Starting with the sales market, we've obviously seen a period of unprecedented activity in the wake of the pandemic, and this has led to the most buoyant market since 2007. In the past year, both Edinburgh and Glasgow have seen average house prices rise in excess of 6%, with prime locations and family homes often exceeding this level. It's also worth noting, as we're entering a period of higher inflation, that over the past 15 years, the property market has outperformed inflation, despite half those years being during the aftermath of the global financial crisis. As we'll consider later, this relationship between inflation and property often makes real estate a popular inflationary hedge. However, there are definitely more testing times ahead. There's been a lot of speculation in the press recently about impending price falls, and whilst there's definitely challenges facing the market, as usual, the picture's a little more complicated. Looking at inflation-adjusted house prices in the UK over the past 70 years, we can see 4 clear house price booms then busts. The most recent period of price growth has not registered at the same rate as previous peaks, and we're not anticipating the same level of boom bust as previous cycles. That's not to say there aren't challenges ahead. Inflation, interest rates, recession, rising cost of borrowing are all going to be factors acting upon the housing market over the next few years. And we're going to have to wait to see how Rishi's economic policy, alongside the Bank of England's efforts to rein in inflation, interact. Certainly, inflation forecasts show a difficult couple of years ahead for those mortgage terms that are due to expire. Looking at lending rates, as this chart illustrates, there's been a sharp increase in the cost of borrowing in the past year. This trend was already starting before the mini budget, but obviously accelerated. Based on current swap rates and forecasts, we expect these rates to be the new norm. For the housing market, this has obvious implications for affordability, access to mortgage products, as well as the incentive to transact. And it's for these reasons we're expecting a contraction in market activity more than a crash in values. Turning to the rental market, a major challenge when talking about the rental sector is the lack of data, and this remains a big frustration when trying to inform conversations with politicians, the press, and other interest groups. When we talk about rapidly rising average rents, we're usually referring to new properties coming to the market. However, these new properties make up a relatively small proportion of all rental stock, probably around 10 to 15%. So when these figures are quoted by activist bodies or newspaper headlines, essentially these rising rates are quoting the cutting edge of values in the market, not the reality of the majority of tenancies. But on this basis, average rents in both Edinburgh and Glasgow have recorded compound annual growth of over 5% in the past decade. And notably in recent years, Glasgow has seen the strongest growth, with a CAGR of 9% over the past 3 years, compared to around 5% for Edinburgh. However, if you consider that upwards of 80% of tenants aren't re-entering the market, and that according to Rent Better, 59% of sitting tenants haven't had a rent increase during their tenancy, the reality of price growth is slightly different. Setting aside the paucity of data, there are some interesting supply and demand dynamics currently at play, which may offer some opportunity in the market. First of all, let's look at rental supply. So there's been a systemic fall in supply over the past 7 years or so, as tax changes, regulation, and the option of short lets have all seen properties move away from traditional long lets. In 2014-15, there were around 13,000 rental properties being advertised in Edinburgh in a year. This has fallen to around 9,300 today. This fall of almost 30% is a time when population, migration, household formation all continue to increase and drive demand. A symptom of this low supply is the speed at which properties are being let. So in the bottom chart, according to CityLets, the average time to let in Edinburgh and Glasgow has now hit an all-time low of between 13 and 19 days. This compares to peaks of 30 to 40 days in the past. Recent government intervention in the sector is only likely to constrain supply further, keeping competition for properties high. There had been a hope and probably an expectation that institutional investment in the form of build to rent would step in and fill this void left by private landlords as regulation increased. However, if we look at the build to rent sector, while the pipeline of units in Scotland has been growing, less than 10% have actually been delivered. And with the current rent freeze, Scotland is a materially less attractive place for investment, especially when your money can go to Manchester, Liverpool, or anywhere else. Indeed, we've already heard a handful of announcements that are putting BTR investments in Scotland on hold. This brings us to demand in the sector. If we look back over the past 25 years, then we see for most of the time it's been cheaper to pay a mortgage on an average Scottish property than to rent the average Scottish property. From the chart on the top, we can see that during the GFC, there was an inflection in this trend, as loose mortgage lending practices meant the cost of mortgages jumped above rents. The recent mortgage crisis and rise in cost of borrowing has once again reversed this long-term trend, but for materially different reasons. What tends to happen in these scenarios is that when paying the mortgage is more expensive than renting, more first-time buyers and other households, in fact, elect to remain in the rental sector. And we can see this in the bottom chart with the number of first-time buyers. In 2008-9, there were around 39,000 first-time buyers a year, and then that dropped to 17,000 during the worst years after the GFC. If this pattern holds true this time around, then we'd expect demand for rental properties to increase over the next couple of years. And whilst there may be a rent freeze at the moment for existing tenancies, we do expect this rising demand to support values and demand in the sector. In a similar vein, with short lets, back in 2019, there were over 15,000 Airbnb listings in Edinburgh. But again, the combination of recent events saw that number fall to around 6,500 in late 2021 before recovering to around 10,000 now. The new regulations, additional licensing costs, again, are all probably likely to see supply tighten again. So with the prospect of recession and cost of living issues, we're probably also going to see an increase in staycation demand. So for landlords that can make the numbers stack up, this sector might also present an opportunity. So just to close things out before handing over to Karen, it's clear we're in for a testing time over the next couple of years, and how the government and the Bank of England approach the cost of living crisis and rising inflation is going to be crucial for the fate of the property market. This said, we're not predicting the big crashes that many headlines are suggesting. We've not seen the same level of boom. We don't expect the same level of bust. Conditions are materially different now to previous cycles. However, there will need to be an adjustment in the market, and it is likely that younger households, first-time buyers, are likely to find it more difficult, but this may actually, in fact, support demand within the rental sector. Whilst lending has shifted from a period of unusually low rates, current rates are stabilizing and are within historic norms, and the market is likely to adjust. The other key point is that in a period of high inflation, property has historically been a good hedge, and if you have debt locked in, then it's probably a better option than many other investments. So just to finish, whilst there are obvious challenges, as with any period of change, there's also likely to be opportunities. So I'll now hand you over to Karen just to take you through some of the details and implications of the cost of living bill for the Scottish rental sector.
Andrew, thank you so much, and thank you for your succinct overview. Been some very interesting stats there. Hello and good morning, everyone, and thank you very much for joining us here online. It's great to have so many of you join us. I'm going to take you through some headline stats, but as landlords, you're facing a host of sector changes at the moment, many of which have been swift and have come without warning. So let's get into what the major changes are and how they will affect you. So what is the bill and what are the changes? So the bill itself was introduced in the Scottish Parliament on the 4th of October and passed on the 28th of October. It will remain in place until the 31st of March next year. So you'll see on screen from the slide what the main changes are. We've got a rent cap, or what's known as a rent freeze. There's a moratorium on evictions. There's new and existing changes to the private residential tenancy grounds, evidence for those grounds, changes to short assured tenancy grounds, and covering whether a tenant fails to move out after having given notice, financial hardship, and all the timescales involved in this. So let's look at what the rent cap or the rent freeze and what does that mean. So essentially at the moment there's a 0% rent cap applicable on all tenancies until the 31st of March. This includes both private residential tenancy and short assured tenancies, but from here on in I'm going to refer to them as PRT and SETs, otherwise it becomes a bit of a tongue twister as we move through. However, with assured and SETs, if there is a contractual right to increase the rent, then that still applies. It's only the statutory rent increase procedure which is affected with this bill. It doesn't, however, include company leases. You can still increase rent if there is a company lease in place. So it applies to all in-tenancy rent increases, but not to any new tenancy. So anything that's coming up for relet, you can still apply a rent increase to sit in line with what the market is currently doing. So let's look at notices which were issued before the 6th of September. So if it was issued before that date, then it is still valid and remains unchanged. Therefore, once that 3-month notice period is up and the rent increase is due to take effect, we can still enforce that. Anything that was issued on or after the 6th of September has no effect and therefore not enforceable. And there is a possibility to seek a rent increase for up to 50% of the prescribed property costs, up to a maximum of 3% of the total rent. So let's look at eviction. So what's been referred to as an eviction ban, it's actually a moratorium, it's not a ban. And where grounds are affected by this, it then means that the enforcement of the order is delayed for up to a period of 6 months from the date it is granted or the expiry or suspension of the moratorium date, whichever is the earlier. There are, however, some exceptions, and these include the intent to sell the property to alleviate financial hardship, intent to live in the property, again to alleviate financial hardship, substantial rent arrears, which have to be the equivalent of 6 months arrears. Property to be sold by the lender, and by this we mean this would be in a situation where the property had been repossessed by the lender. tenant not occupying the let property, or in extreme cases, criminal or antisocial behaviour. So let's look at the private residential tenancy grounds. So existing Schedule 3 grounds remain unaffected. There's a new ground 8, which is if the tenant is no longer an employee and that property came with that employment, new grounds for eviction and new grounds to alleviate financial hardships. These points, we think there'll be some specific points and questions, and we'll pick them up separately in the Q&A. If anyone has them, pop them into the chat. So let's look at evidence for the grounds. When we're looking at arrears, the amount of arrears must apply, 6 months of the arrears must apply when the notice to leave is served on the tenant. And again, we expect some specific questions on that in the Q&A, so please pop them in if you have that. So moving on to notice periods for the grounds. So rent arrears, the notice periods for the new ground 12A will be 28 days, which is 28 days from it being equivalent to 6 months of rent arrears. Landlords selling or moving in due to financial hardship, as before, this will depend on whether the tenant has occupied the property for 6 months or more and therefore the notice period could either be 28 or 84 days. However, the pre-action requirement from before of offering help and trying to put a payment plan in place remains for arrears. If we look at the SAT grounds, ground 1A, the intent to live in a house to alleviate financial hardship, and ground 8, substantial rent arrears. So if there's a contractual right to increase the rent, then that still implies on an SAT. It's only the statutory rent increases which are affected, and this covers both assured and SATs. And for the purpose of this webinar, we focus more on PRTs, as this is where the majority of our leases sit since the PRT came into effect in December 17. Any specific SAT questions can be asked in the Q&A if you have any. So let's look at what happens if a tenant fails to move out after given notice. So if they've given notice and then that date expires and they fail to vacate, what can you do? So looking at the terms of the Act, it seems that the ability for a landlord to seek an order for removal based on the tenant having given notice to leave and then not vacating the property will not be affected, as this does not rely upon eviction grounds. Therefore, in this situation, we can still apply to the tribunal as before for an order for removal. Eviction orders are granted based on the grounds for possession. So if we look at financial hardship, so if a landlord is facing financial hardship, can you request a rent increase? So if you have financial hardship, you would have to provide evidence for a rent increase, but this is in relation to increases in the prescribed property cost, not personal financial hardship. And this would be capped at 50% at 3% of the current rent. Unfortunately, there's no definition of what financial hardship is, so that will fall to be assessed by the first tier tribunal as a prerequisite of establishing the grounds which would be relied upon. Then after that, the tribunal will have to assess reasonableness of granting an eviction order. So if we then look at the timescales involved, so the legislation itself is under constant review and can be extended. There's provisions for extending it and also for increasing the cap and, as I mentioned, that time frame. So there is a potential that the cap could continue beyond the 31st of March next year, and it could be at a higher level than the current 0%. We think it's likely that the 0% cap may be lifted to a higher amount in March next year, and then possibility of that being reviewed again in September of next year. Again, it's under constant review, and we'll monitor that and update as and when we find out any more information on that, because we appreciate it is, a really important part of you being a landlord. So if we now look at short lets, there's obviously been some major changes within the short lets market. So this again came into effect, but this came into effect on the 1st of October this year, and it affects existing short-term landlords and new landlords thinking to come into the market. New landlords will have to apply now, both for a licence and potentially planning permission, and you can operate without one at the moment. If you're an existing landlord, you have until the 1st of April 2023 to apply. Now let's look at some of the license types, because they have detailed some different license types. So there's a license for home sharing, and you'll see beside each, I've given just a brief summary of what that means. So moving on, there's a license for home letting, there's a license for home sharing and home letting, and a license for secondary letting. And there's an additional temporary license in place for a period of up to 6 weeks. This would cover a period, for example, if you were looking just to short let your property for the Edinburgh Festival. And application fee for the application of the licence, if should that be refused or withdrawn, is non-refundable. The one good thing to come from all of this is enhanced safety and compliance is required, and this brings short lets in line with long lets. So that's a really good positive that's come from this. Any licences all have to be in place by the 1st of July 2024, when they will start to take enforcement action. So if we just do a quick synopsis, a quick conclusion. So if we look at long lets, rents are frozen until 31st of March 2023. Rent increases issued before the 6th of September are valid and enforceable, and rents can be increased on a relet. New properties coming to the market can be set at market levels. Landlords proving financial hardship can apply for that increase, and that would obviously apply to the prescribed property costs. And again, provisions in place to extend post 31st of March next year, and a moratorium on evictions. So looking at short lets, a quick summary of that. New landlords must apply now. Existing landlords, you have until the 1st of March next year. And all landlords will require a licence and/or planning to operate beyond the 1st of April 2023. And the critical thing here, if your licence and planning is refused, you have 28 days in which to cease trading. So just going to wrap up. Appreciate there's been a lot on the slides, quite a lot of information for you to take in, but we will send out a recording, and also our rent-free briefing is hot off the press today, and that will be coming out, and that has been prepared by our in-house market research team. So I'm now going to pass you back to Neil for the Q&A, but for my part, thank you so much for listening. I hope you found this of interest, and we look forward to your questions in the Q&A. Over to you, Neil.
Karen, thank you very much, and Andrew, for your clear presentation. Wow. So while we get Rory and Andrew and Karen settled, maybe come off mute just in case, so that you're ready to kind of speak. What a lot of information for us all to take in. So as Karen has said, we will send this out to you. I think some people have had an issue with looking at the slides. I do apologise, but when we do send out the follow-up email, you will be able to see the recording and with the slides as well, and the supporting briefing document. So there's so many things as consumers and investors that are being thrown at us at this time. There's so many questions that are coming our way. There've been some people that have raised their hands to kind of maybe ask a question due to just slightly disabling some of the chat function. Please can I ask that if you have a specific question that you would like to ask Andrew, Rory, I was going to call him Samuel, who's been doing apparently his son's homework, and Karen, please can I ask you to use the chat function. So Rory, I think in many ways, I don't know if I like to ask this kind of first question, but I'm going to really put it over to you. But a question has come in with a situation where a property is sitting as a marital asset as part of a divorce settlement, or a divorce that needs to be sold. Is this now going to be affected by the change in this regulation?
Thank you, Neil. I think yes is the short answer to that. Potentially, if there is a matrimonial asset that's sitting with a tenant in the property, and that either needs to be sold or in order to comply with a court order in terms of a capital payment or whatever it might be, the short answer is yes. Assuming we're talking about a private residential tenancy or a PRT, then you've got two grounds that could potentially apply, which are grounds 1, which is the landlord wants to sell, or grounds 1A, that the landlord needs to sell to alleviate financial hardship. And those are the two grounds that you could potentially rely on. The first of the grounds is covered by the moratorium, and the second, assuming you can persuade the tribunal, firstly, that there is financial hardship, and secondly, that it's reasonable to evict, then it won't be covered by the moratorium. So yes, in principle, it is something that could affect some form of settlement of any matrimonial dispute.
Okay, Rory, thank you very much. I also forgot to mention that we are going to run a poll as well, that if you would like a webinar that is based with Rettie Financial Services on buy-to-let and what's happening within the mortgage market, could I please ask that you show your interest for the next webinar as well. So apologies for not mentioning that before we went into the Q&A session. Rory, thank you very much. One of the things that's very topical, and I don't know whether this can come from Karen, maybe, are we still in a process with both of these amendments that have come into the rent freeze and its short lets? Are we still in an area where we can respond, we can refute, we can reject? Are there any areas where we can make that through? So I think, Karen, can you answer that?
Yeah, sure. Thanks, Neil. So if we look at short lets, we've been asked many times, do we think this is the end of the short lets market? The answer is no, I don't. But I feel we'll have reduced stock levels if the current legislation stays in place. However, I do think there'll be a U-turn at some point in the not too distant future. There are various groups who are speaking and collaborating as we speak to challenge this new legislation. Because if you look at the short lets legislation coupled with the changes that have just come out in the PRS, what that is doing is restricting stock, which Andrew has covered as well. So both changes were reducing stock levels. And if we look at the festival, this year's festival, for example, it's reported that a third of the shows didn't take place because the performers and the production companies couldn't get the accommodation. So we've got a wider consideration here, both within the PRS and the short let sector, to look at what that housing stock is and the effect of it. And if you look at the wider economy, for example, in Edinburgh, it's reported that the festival alone for that month, 6 weeks period brings in £1.4 billion to the Edinburgh economy. So let that figure sink in. If we don't have enough accommodation, will we have a festival? So I think we will see a review of the short lets legislation, and I do think there'll be some sort of judicial challenge to the changes to the long let stuff as well. Timescales, I've got no idea on when they'll be challenged, but I do think they'll see challenges from both sides.
Okay, and I think, one of the things that you might answer, and I think it's coming in from Jen Clark, saying that, I think it's criminal, the fact that if you are rejected and a licence, that the council is still taking that payment. Is there an appeal process if a licence is rejected on the short let?
Not to my knowledge. We tried to get some clarity last week through planning on a couple of things, and the response that we got on a couple of the questions we asked was contradictory to what the guidelines were saying. So I think internally they need to sort out their processes, because the internal answers to some of the questions that we're receiving don't marry with what the appeal, not so much the appeal process, but the licensing and application process. So it's a lot of money up front for a short let landlord with no guarantee that you'll get your license or your planning.
Okay, brilliant. Thank you very much. Andrew, one of your interesting points was that 59% of kind of current landlords, if you took that right within the top bit, haven't actually increased rents. What do you think this kind of rent freeze has probably done for a landlord, that if 59 of them have already kind of sat with their rents at the same level through the same period? What do you think this announcement of a rent freeze is probably going to do?
Well, I mean, I think there are two issues there, probably, Neil. I think on the first hand, it's the understanding more broadly that rents are far more stable than the headlines might suggest. We have all these figures. It's like, oh, rents have gone up 10 whatever % a year. And as I covered in the presentation, that's pretty much just new tenancies. So the ONS have tracked rental growth, and I think it was around 3.6% in the past year, and has historically underperformed inflation. We've done analysis on the Scottish Government, BRMA, local housing allowance data. Again, that's remained very stable. A lot of the inflation's coming at the very top end of the market. So this sort of perception that rents are running away, I think, needs to be challenged. But at the moment, the data is very weak. So for landlords, I mean, the practical thing is, if you're told to freeze your rents at the first possible opportunity, you'll probably then increase them. So one of the unintended consequences potentially of this will be fine, rents will be frozen for however long, but then when the freeze ends, we'll probably see rents jump forward again. And it's just one of the, I think, many unintended consequences that potentially comes down the line from this, you know, with new supply being built, or, you know, investment in the social sector, net zero targets. I mean, all that, you know, there's a lot of different elements that are being impacted by the rent freeze that weren't necessarily planned for, I think.
Yeah, no, exactly. So it just brings, I suppose, in many ways, in my opinion, as a landlord, it brings attention to the fact, well, maybe I will look whenever I've got an opportunity to increase my rents, which kind of answers the question that's coming in about, you know, Karen, I don't know, are you seeing when you're taking on a new property today, are landlords really pushing towards increasing the rental values? So from what you saw before the announcement and the rent freeze to what you see today, are you seeing rental rates increasing for new properties?
I think that's twofold. So if we look at our relet stock, a lot of we have long-term tenancies, and a lot of those increases haven't happened over the last couple of years. So for things that are coming back to market, they're being set at market rent at the, you know, what the current rate's saying. And so I'm going to look at obviously all the stats that go with that in terms of what things have been letting for. Are we pushing them? No, we're setting them at market. You know, what's a fair market rent? So on, as I say, the relet side, you know, we will look at that, maybe something that was 1,200 and it's been 1,200 for the last 3 years. That's maybe going up to 1,300 or 1,400, which would bring it in with current market levels. Anything that's new coming to the market, again, we do quite a lot of research just to see what things have been renting for, and we do have quite strong conversations with landlords if we feel that the rents are too high and it's not achievable. Testing the market is the way to test whether something is undervalue or overvalue, and you'll all know that if you put something on and you don't get interest, then it's potentially overvalued. If you put something on and you inundated with inquiries, it's either at the right level, and then there's you know, the demand, supply and demand. So there's various different aspects that we look at when we're bringing things to market. I wouldn't say we're over egging it.
Okay, fantastic. Thank you very much. Rory, back to you. There's a couple of things. You know, how does the time periods of the freeze interact with 3 months' notice of a rent increase, or does this affect making the freeze a 9 months minimum?
Well, it will depend very much on how the rent cap is reviewed throughout the period that the Act is in place, but the way things are set up at the moment is that where the rent cap is set at 0%, then all the parts of the 2016 Act, for example, relevant to PRTs, are disapplied, meaning that you can't issue a rent increase notice while the cap is sitting at 0%. So in effect, whilst we have a 0% rent cap, we can't, for example, serve a rent increase at all in the anticipation that things will change, for example, on the 1st of April or from the 1st of April. So as it stands, it could be that, but the process, is, I think, has appeared in some of the questions in the Q&A. It is supposed to be under review by the Scottish Government, and things could change. But whilst the rent cap is sitting at 0%, we can't issue any rent increase notice, except, as Karen said in her presentation, where we're looking for up to 50% of prescribed property costs, such as insurance or other aspects of letting costs. So yes, it could in effect extend the period, because we have, obviously with a rent increase notice for a PRT, it's a 3-month notice period. So yes.
Okay, fantastic. There's a couple of ones. There's a very good one from someone with regards to the government and the needs to reviewing the provisions of the cost of living. I can actively say that we are, as a business, we are lobbying the government with regards to the impact of what this is doing to our market. I don't know if Rory or Karen can confirm, but certainly on the BTR side, we are, through our BTR director, and certainly things. So Karen, can we confirm that we are actively lobbying the government with regards to the evidence and the impact that these regulation changes are having on the lettings market?
Yeah, we're in consultations with Rory and other people, and Rory's obviously taken the lead on that. But yeah, certainly through our research team, we're collaborating with outside colleagues to provide information for a potential challenge to that. I think that's at the very early stages, and I'm not involved in that personally, but I know Rory is, so I wouldn't like to say too much on that. But yes, again, I expect to see some challenges.
Yeah, so we are active. Rory, do you want to add any context to that?
No.
Okay.
No, I think it's fair to say that certain interested groups are looking at it, and whether there's scope for a challenge. And as Karen has said, things are in the infancy at the moment, but it's in the stage of we're working on it. But for confidentiality reasons, I probably can't say too much beyond that at this stage.
Okay, that's fine. I'm not going to put you on the spot, so I'm going to move on. Andrew, I'm going to say to you that there's been a comment to say that, you know, if we've said there's been a 20% price growth in Scotland over the last 2 years, is that not considered a boom?
Yeah, I mean, in nominal terms, it might seem that way, but I think when you factor in inflation and wage growth and those other factors, it kind of takes the edge off the headline figure. And certainly if you compare it, inflation adjusted to previous booms and busts, then it's not quite at the same level. But yeah, in nominal terms, there has been very strong growth.
Okay, and we could probably say that there was a bit of element of the kind of the kind of COVID period that we've been in, the kind of race for space that we saw within countries. So we could say that had some evidence of what that did for us as well. Karen, could you clarify the difference between a license and a landlord registration?
So landlord registration is applicable to a long let landlord. In terms of what they have to apply for, they have to apply for a license. In terms of the short lets, what we're looking at is a license to operate and potentially planning permission. They don't have to apply for landlord registration, so they're two different things.
Great, fantastic. And also, you know, some news articles are saying about the entrance of flats. So I assume this is coming down to the short let part, that within planning permission, the short term, unless for a good reason. So I think is it main entrance to flats and tenement buildings that will not be granted planning permission for short term unless there's a good reason. Do we have any insight into that?
Yeah, so if we look at what the guidelines is in terms of the application process, if you're within a tenement stair, and if you look at the makeup of the markets in the main cities, you know, we are made up of tenement flats in the main, even though you've got a new build development, it's still within a shared stair. So the guidance is anything within a shared stair is unlikely to be given an application or planning permission to operate.
Okay, fantastic. This is probably, there's a couple of questions that have come in regarding eviction. So Rory, this might be you, but
yep.
There is someone that's got 2 tenants. One of them has left and they're only paying half rent. Could they evict? And then just adding into another one on a shorter tenancy, there's a tenant only making partial rental payments. How long does the process take for that? So I think that's kind of 2 questions. So one, there's a tenant that's left, half rent being paid. Could they evict? The other one is on an SAT, tenant making partial rent payments. How long would the process take to terminate that agreement?
In both cases, it's really going to depend on the level of the rent arrears. If we're looking at not serious arrears or substantial arrears per the new Act, then you're really looking at quite a long process potentially. You've got your notice period. So if we're talking about a PRT, standard ground 12, which is 3 consecutive month arrears, then you're looking at a 28-day notice period. When that expires, you're then entitled to lodge the application with the tribunal. The tribunal process takes about 8 to 10 weeks, roughly, to get to a hearing. The tribunal then will consider the application. They can grant it at the first hearing. So assuming that it is granted, if it's a standard ground 12, or if we're talking about a short assured tenancy, grounds 11 and 12, then you're looking at it being affected by the eviction moratorium, which means you potentially can't enforce that order for 6 months from the date that the order is granted. If we're talking about substantial arrears, which are 6 months or more, then you can cut out that 6-month period, and then you'd be looking at a 30-day period, which is the appeal period effectively, and then 14 days after that. So with the moratorium, it's going to be a long process if you're looking to evict by way of rent arrears, unless you can rely on substantial arrears. Now, bear in mind that all grounds are subject to the discretion of the tribunal anyway. So, just because a tenant is in arrears doesn't mean you're necessarily going to get the order either.
No, exactly. And actually, a quick question that's come in, and I think we probably just need to make this the last. I'll just look at my timings. I can't believe my multi-talented skills from going to Q&A, chat, and WhatsApp. It's been amazing. But that just says, so in these agreements, I assume joint and several be liable with one tenant. Is that not the way that it would work? That the actual tenant remaining in situ would be liable for that arrears, or that loss of
Again, it will depend on the type of tenancy we're talking about. So if it's a PRT, then which is what I'll talk about, because I think that's what is probably the majority of tenancies now. With a PRT, if in order for it to be brought to an end, all joint tenants require to give notice. And the fact that one may walk off or decide that they've had enough and leave the property doesn't change the fact that they're both, or however many of them are, they're all still liable for the rent until that tenancy is brought to an end, either by the tribunal granting an order or both tenants giving proper notice to leave. So whilst one tenant may be sitting in the property and actually occupying it, they both remain liable for it until the lease or till that tenancy is ended.
Yeah. Okay. Well, I think there actually, let's just do one more. So the direction of travel in some of the artificial rent controls that are here to stay. There is a new deal or the cost of living working with the current government at Holyrood Hands. What do the panel think controls may look like moving forward? So I think that's probably answering, and there's been a few questions saying, are there more controls coming down the lines? Are we going to be seeing or expecting more when it comes to this particular property sector?
I don't know who wants to answer that one, but I would say potentially yes. And if we look at rent control zones, our feeling on the rent control zones are they haven't worked effectively in other countries, in other European countries. We don't at the moment have enough data to probably bring in rent control zones. They also that data has to be monitored, uploaded. Somebody has to control that data. We need a system to run it all. So I think we're a bit away from seeing a rent control zone coming into Scotland. But who knows? As we've seen recently, things happen without any prior knowledge, and changes just coming, and then we're left on the back foot trying to react. So I think it's watch this space. I don't think we won't see anything further coming in, but it's to what extent, I think, is the question. Okay.
Rory, do you want to add anything to that?
In terms of general rent controls, the direction of travel, I don't want to scare anyone. They've not had their lunch yet. There was a recent consultation, which I think was called a New Deal for Tenants, where the Scottish Government outlined their plans for the sector going forward, which came on the back of an earlier consultation, which was called the Route Map to 2040. And what is clear is that the Scottish Government is committed to putting in full rent controls by 2025. And they're at the information stage or information gathering stage at the moment. And that includes looking at forcing or through the landlord registration process, private landlord registration process, for landlords to provide information on levels of rent, number of properties, that kind of thing, to allow them to build a picture. So I think whilst we have a rent cap now, and whilst there is a strong suspicion that that rent cap will be increased from 0% to 3% or whatever the amount actually might be, the direction of travel is towards full rent controls, unfortunately, I think. And that will mean initial market rents, not just increases in rent. Karen's right that with what we have, the rent protection zones or RPZs, we've had those potentially since 2017 or the end of 2017. We've not seen any of them yet. And the main reason why we've not seen any of them yet is because it required local authorities to actually provide data to justify that they were needed, and none of the local authorities were able to do that. But so, Andrew will tell you more than I will whether there has been a genuine increase in rents across the Scotland as a whole. But certainly, I think the direction of travel is towards rent controls. Okay. I think the sector needs to do what it can to try and resist that.
Okay, well, I'm going to have to stop us there. I think, thank you very much, Andrew. I'm sure you could say something about that, but Rory, thank you, Karen, and for all of your questions. We've hit 10:45. We will come back to some of the unannounced questions. There is a high level of response that you would like a webinar with Rettie Financial Services on what is it looking like within the borrowing in the buy-to-let sector, so we will come. So as you can see, there are so many things that are hitting us in so many different directions. Rettie & Co will be here to support you. We're not here just today. We're here for tomorrow, any day of any week of any month. So please come and speak to the experts whenever you need any further advice. And then whenever we feel relevant to bring you all back together on any additional changes that we see, we will make announcements as we have for future webinars to keep you all informed. I'd like to thank the marketing team that have pulled in the background this presentation for us together. So thank you all that's been involved in the background as well. I hope all of you have found this very encouraging. I can't believe I'm saying this. Have a great end to your year. Enjoy your Christmas and New Year as much as you all can. Thank you for joining us today, and we look forward to seeing you all very, very soon.
Thank you.
Thank you.